Good morning, good afternoon, good evening, wherever you are in the world right now. I hope that you are amazing. So, with regards to Bitcoin, I want to start today off on this 128 chart, the trade chart, and just speak to what I did yesterday with regards to having both possibilities laid down. Here is the highest probability of price going either direction. Okay, so when it's really close to its turning point, it could either progress or regress, either go up or go down. So, what I like to do is build out both scenarios and see which one it favors. All right, so over here, if I had to suggest that this was a turning point, which would have been a really tight turning point, very close to that one, uncharacteristically um, unlikely in this scenario because of the market structure that we look out for. If we had done that and left it upwards, you can see price didn't break the kill zone. Instead, it broke the lower threshold. So that's what the power of the kill zone is on its own. But by having both of them, you can now see which direction is favored. So depending on how neat you like your charts, you can employ this for yourself if it's going to add value to you. It's just something I use in the areas of what I call death alley, this consolidation area over here where there's not much action, where little wicks can hit your stop loss, or a big wick, kind of a sporadic big wick, getting the market into position can also hit a stop loss and then go down to target. So whilst you are in this death alley, you can have both setups up and see which one the market favors. And how you know which one the market favors is with the support and resistance. You can see which fan lines it either regresses or goes down, or fan lines to the other direction, it can progress up. So whichever one wins is the dominant direction. And that's really good for us because we trade on the transitions. That's where we make our money. So now that we know it's down, what next? Well, before I get into setting up the look forward chart, what I'm going to do is just show you guys a little technique that I use with regards to trading. Okay, so this is MetaTrader. Oh, MetaTrader is a very old looking exchange. I don't even know how to describe it. How would it describe itself? Normally there's an about over here, but because this is made for Windows, it gets wrapped up in something called a wine environment, or it's just technical stuff. So normally I'll just go about and I'll tell us a bit more about it, but not in this case. So what you're looking at is a really old school looking platform where you can place your buy and sell orders. This is quite different to those who are just operating inside of Binance, as you can see by the layout and how everything looks and works. Now, the reason why I've had to get familiar with this is because this is something that the prop firms like to pair with. So FTMO, the company I've been talking about of late, they don't have a exchange that they operate from. What they do is they have a liquidity pool and allow traders like myself to trade the liquidity on their behalf. And again, we do the profit share, but that's their business. Their business is not the actual software that does it. So this is software that represents their environment. So over here, well, I want to open up a trade. Don't want this to run too far away. So I'm going to close this. This account, you can see over here, is over $1,000 profit so far. And this was opened up on the 7th of April, 10 a.m. my time. So that was about a day ago. And now it's up 1,000 in a day. So I'm going to go to my other account. Whoop. And I'll just go to File, log into Trade Account, change this away from 82 to go to 312. Just make sure that's right. No, that's wrong. I can see about the server. This is Medicaid server, so it's not right. I'm going to go to 276. All right, cool. There we go. FTMO server 4. All right, make sure that I'm on the right market. You don't want to make silly mistakes. I've made silly mistakes in the past. So I'm over here on BTC USDT. And because the market's run already, what I was thinking of doing was opening up a 0.5%. I'm going to stick to 1%, and then just open up a 1:1 risk reward ratio. I'll speak to all of that now. I just want to open up the trade because I see it's moving. All right, so MTOPians, when you use our customized tool, make sure algo trading is selected up top, and then double click on the execution, and you'll see it orders opened. Okay, all right, so what did I just do? Well, I can tell by the charts that the price is going to move down, right? So we've got a downtrend as well as a downtrend here. And as price now is not confirmed to be in a downtrend, hold on a second, let me just make that sizable. Okay. So what I did here was I had both scenarios, almost hedging the market in a way, but without capital open, just on the charts rather. And then I saw of the two directions, the favored direction was price going down. With that in mind, now I know the dominant direction. I went and obviously confirmed over here that this is also in a downtrend. So I suppose whilst we're going all over the show, I can probably set this up as well to make sure that we've got a comprehensive look on the market from here as well. So just to confirm, we're looking at MTOPS checks, market structure, turning point 1, 2, 3, 4, and 5 on the right place, 6, 7 on the right place, 8's in the right place. Now we've got 9 heading down to 10. Okay. Just scaling this up real fast. Too fast, too furious. Just free-handed like that. And now price is also leaving the kill zone over here. I mean, there's just so much I want to say at any one moment. I just wish I could have like 3 mouths and speak all of it at once, instead of just stopping and starting and getting everywhere along the journey all at once. But when you're looking at this, there's just so much information that's coming in. So I'm just going to try to talk to everything that comes to mind. I do apologize to anyone who gets frustrated when I don't finish off a point. I'll hopefully get back to it later. So what I'm wanting to talk about now is that on this trade chart, it's quite confusing at times to be a purist when it comes to trend on your trade chart, because strictly speaking, this high has formed above the recent high. So this trade chart is saying that we're in an uptrend. Okay. However, over here, I'll look at head chart, a dominant trend chart. The previous high here is placed there, which means this is a lower high and a lower low. So the dominant trend is down. All right. So this is the kind of obvious trade setups that I look forward to, or I look for. What I want from this is just to be able to open up a trade, forget that it's even opened, and allow it to just cook, allow it to do its business. So ideally, if this is the dominant trend direction and if this is what is the main pull in the scenario, we're going to see price break a lower low, because that's what a downtrend is, and get down to about the mid 50s. Now that's a good lucrative trade for me should that happen. If I have the patience to wait for it to go until 5 days from now, with the open trade and not lose any sleep and not obsess about it and not keep on checking how much profit I've made so far, then if I could just forget about it and let it go for a week, I'll be very, very well off. Okay, on that one trade alone. So I just want to make sure this is nice and neat. That looks good. And then from this side, I'll just monitor the movements. Now, another way of riding the market down is kind of borderline over trading. So there's an argument for and against that. Basically, what I'm doing is just scaling so that these are interacting at the right points. Is that I would close this transition when the next kill zone is formed, wait for it to ride up, and then ride the next one down. So instead of just leaving it and allowing it to dance in the arcs over here, I'm just going to allow it to regress and then sell for profit, get into the next position, and let it go again. Anything more I need to say with regards to charts right now? I hope not, because I do want to talk about trading some more, which is different. Like a lot of people get kind of lost in thinking that charting and trading are the same thing. It isn't. And psychology is the other thing that's different. So to win at this game, you got to master three things: master charts, master trade, and master yourself. Charting is one thing, trading is another thing. All right. So what's the difference? Well, charting is basically forecasting the future of price action based off of geometrical shapes and utilizing what I use, the MTOPS method. Trading is what we do with that information. Okay. And trading is super important to keep separate from charting, because the mindset and discipline and everything that you need to have for trading isn't the same as charting, because charting is more analytical. Trading is more like, charting is the science because you're using geographical everything and or geometrical. When it comes to trading, this is more of an art. You obviously have like a way to just monitor your numbers and look at your trade journal and be active when it comes to how to monitor your actions. Like, there is that kind of science stuff, but the art is trying to keep your head in the game, be brave enough to keep a position open for longer than you need, to earn more than what you think you deserve. Like, often I would close my trade for $750 only to lose out $2,700 additional dollars because I didn't keep the trade open, for example, and so on and so forth. So it's like the art of trading. It takes development. It takes persistence. It takes a lot to make sure that you can succeed in trading and on charting. They're not the same thing. Okay, so they're different skills. So when it comes to trading, let's talk about trading for the rest of the video. FTMO, all right, so FTMO is the prop firm that provide liquidity for us to trade on their behalf. They will put in something called lot sizes. All right, so lot sizes is almost like the size of a unit. So almost like the price of Bitcoin. I don't know exactly how it works because it's meant to confuse everyone, and I just didn't take the time, effort, or energy to try and understand what the lot sizes represent, because there's different interpretations on the internet. So basically, when they ask you to put in volume, you can put in a certain amount of units and then just hope that it's right. The dangers to that is that when you put in the amount of units just haphazardly, the amount you're putting in isn't relevant to the size of your account. Now, for those who have been in the trading realms for a while, you would have heard, or you perhaps do it yourself, you should only risk 1 or 2% of your account, 3% at absolute most. And it doesn't make sense to retail traders who've got $1,000 in crypto, even $5,000, whatever, because 1% on $5,000 isn't even worth you getting out of bed in the morning for. You know what I'm saying? So, like, that's why I go for these bigger accounts, $100,000 accounts, $200,000 accounts, so that I can use 1% of that and it still be worth my while. All right. So back to what we've designed at MTOPS. Okay, so over here there's the price to go up or down. What this represents is the lines that are on chart over here. So the purple represents a stop loss. I don't like using red. I think it's a fear-mongering color and manipulative. So the purple is the stop loss, and then gold, well, as close to gold as we could get, is down here, and that's obviously where the target is. What you're also seeing over here is that where I've put the stop loss is behind the recent turning point. Okay, so you'll see that line up well on the charts. This is another reminder to never use the charts within the exchanges to chart from, rather use charts based on your full strategy environment. So you can tell that I've done that in TradingView, which is charting, and then trading itself, the trading only happens over here. It's not trading and charting, happens over here. So it's two different disciplines, two different platforms. So over here, I just make sure that my stop loss is behind recent high. So that's what I've done. And then, to that point, you can see I didn't do it there because of convenience or whatever the case is. The temptation to do it there, however, is you see how it moves. The bottom one moves in line with that because of the design of our tool. So if I pull it closer and I use a 1:1 risk reward ratio, so you look over here, risk reward 1:1, you'll see that the closer I move it, the closer the target gets. Now, the closer your stop loss is in this environment, which is the environment in which I trade, the closer the chance of it stopping and then coming back and hitting your stop loss, which means that you've lost, in my case, $1,000. And then that was all to, the reason why I'll do that is because it will tighten the scope of this this target so that I could get to target sooner. And trust me, you don't want to be doing this. I've done this so many times in the past, and it got close and came up and knocked me out. It's just a shitty way to trade. So what I do now is I absolutely, strictly, without excuse, put my stop loss back here behind the recent turning point, and I allow it just to take its time to get to the target. Should I speak about a bit more on that now? No, let's continue the tool. Okay, so the entry updates because this I've designed it so that it only works with market entry. It doesn't waste time on pending or limit orders. It gets directly in the market. The value to that. All right, before I get into that, I just want to say with the tool that we've designed, I've designed and Brett helped me code it. They're one of my students. Is the whenever a position is opened, okay, so this applies to all of the different trades across the markets that this will operate with. As soon as a position opened, with absolute no excuse, every single time, every position is open, it has a stop loss. Okay, without our tool and by using this exchange just by default, it doesn't happen. You have to enter in your own stop loss manually. So this tool ensures every single time, every time without fail, we open a position, it sets in a stop loss. Reason being is that we never, ever, 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 ever want to put our account at jeopardy. All right, we don't ever want that account to blow up. So this over here ensures that even if you get your trade wrong, even if you go too big, whatever the case, well, not too big, like unnecessarily big in your position size and so on, your account is still protected. You're never going to blow up your account by utilizing this tool, because every single time, should you put the stop loss in the right place, which is the previous to the higher, the recent turning point, then you're going to have your stop loss entry immediately opening with the trade. Okay, you don't understand how valuable that is, and for those who have actually blown up their accounts, you do. All right, so I'm running out of time today, but I will cover some more of this tomorrow. The last thing I wanted to say is that this account is server 4, so it's a real account. What I've learned over time is to have 2 accounts open, and the other account is a demo account, just to be completely transparent. That's the $200,000 account. And you can see over here $1,300 on that one. So the one is just to kind of take more risky trades, so I don't risk my main account. And then the other is once I've got confirmation, I open up the real account. All right, ciao.